All right, welcome to today's Explainer. Today, we're taking a really deep dive into one of America's most recognizable corporate titans, and that is AT&T. This is a company that's operating at a genuinely fascinating crossroads right now. On one hand, they're this massive legacy telecommunications giant, literally wired into the daily lives of millions of people. But on the other hand, they are fighting tooth and nail to maintain that dominance in a world that is shifting and demanding new tech at breakneck speed.
And that brings us to the ultimate question we're unpacking today. It's a classic battle of old versus new. You've got this massive, ground-based terrestrial infrastructure going up against literal space-age disruptors threatening them from above. Can a company that built its empire on old copper wires and cell towers pivot fast enough to secure its future? Or are they just destined to be outpaced by these shiny new competitors? Let's find out. Section 1. The giant's current stance. Let's take a second to understand AT&T's $172 billion scale. To really grasp their battle plan, you have to understand the sheer size of their foundation today. AT&T relies heavily on its core U.S. wireless network. It powers a whopping 70% of their revenue. To put that into perspective, they're connecting 74 million postpaid and 17 million prepaid phone customers right now. Beyond that, you've got 14% coming from their fixed-line enterprise business, 13% from residential broadband, which serves about 15 million customers, and a smaller 3% footprint down in Mexico. So this wireless core, that's their engine. Protecting it is absolutely everything to them. Moving on to Section 2, Unpacking Q2 Earnings. Let's look at their August 2026 financial results. So you're probably wondering, how is that massive engine actually performing today? Well, in a market that's been full of mixed signals lately, AT&T just delivered a massive earnings beat that totally caught Wall Street off guard. Their total revenue of $31.6 billion was, a very modest 0.6% miss compared to expectations. But AT&T delivered an adjusted earnings per share of 65 cents. That blew past the consensus estimate of 59 cents by more than 10%. They are driving some incredibly serious bottom-line profitability here. And what's wild is that this profitability is being fueled by some really aggressive customer acquisition. Wall Street predicted they'd bring in around 338,500 postpaid phone net additions. AT&T didn't just beat that, they crushed it, capturing 432,000. In fact, this was their strongest consumer postpaid wireless account growth we've seen in over 3 years. And they did it while keeping their churn rate down to a super impressive 0.86%. Make no mistake, they are out there actively winning market share. Ultimately, all of this operational success translates into cold, hard cash. AT&T generated $4.7 billion in free cash flow, up 6.3% year over year. And why does this matter so much? Because free cash flow is the vital ammunition they absolutely need for the insanely expensive infrastructure battles that are coming up. Section 3. Fiber and Spectrum Strategies. Here's how they are arming for the future. Now, AT&T isn't just hoarding all that cash. They're aggressively deploying it to future-proof their network. Their grand plan is to blanket the entire country with high-capacity fiber internet. Right now, they're sitting at 38.6 million locations, but they're aiming for 40 million by the end of this year and a staggering 60 million by 2030. The whole strategy here boils down to one word: convergence. They want to create these super lucrative household bundles. Right now, over 42% of households that have AT&T's home internet also subscribe to their wireless service. Fiber is basically the physical tether keeping you locked right into the AT&T ecosystem. But hey, the physical ground game just isn't enough anymore. In July 2026, AT&T closed a jaw-dropping $23 billion acquisition of wireless spectrum licenses from EchoStar. We're talking about 50 megahertz of low and mid-band spectrum spread across 400 different markets. This massive buy is specifically designed to turbocharge their 5G capacity and secure the kind of connectivity speeds needed for an AI-driven future. Plus, as a nice little bonus, it secures a wholesale network partnership with Boost Mobile, guaranteeing AT&T a whole new wholesale revenue stream. Section 4. The SpaceX Satellite Threat. The Battle for the Skies. Okay, so while AT&T is down here busy laying fiber and buying up traditional spectrum, there's a sci-fi disruptor threatening to upend this entire model. SpaceX has been loudly claiming that their new V3 broadband satellites are going to directly compete with the U.S. wireless industry. But we need to pause and balance the hype with a little reality. Morningstar analysts recently advised that SpaceX's ambitions should be taken with a, quote, grain of salt. Building a reliable satellite-based mobile competitor totally from scratch, it faces some massive technical and regulatory hurdles that you just can't gloss over.
That said, the telecom industry is definitely not sitting on its hands.
And this isn't just AT&T's fight anymore, and an incredibly rare show of cooperation. Seriously, it's like a telecom Avengers assembling. Legacy giants AT&T, Verizon, and T-Mobile have formed an unprecedented joint venture for direct-to-device or D2D satellite communication to fix their own coverage gaps. So you've got these massive incumbents forming a highly coordinated alliance on one side to counter SpaceX going it totally alone on the other. It is going to be wild to watch.
Section 5, Wall Street's Valuation. How the market actually weighs this battle. With all these epic battle lines drawn, analysts are heavily debating how to price in AT&T's recent wins against those long-term satellite threats. The immediate reactions are a bit of a mixed bag. RBC, Argus, and Scotiabank slightly reduced their price targets recently, though they all maintained outperform or buy ratings. On the flip side, Wolfe Research actually upgraded them to outperform with a $29 target. If you average all the analysts together, the consensus target sits at $29.19, holding steady with a solid moderate buy rating.
When you look at the fundamental bottom line, based on the current share price of $25.12, platforms like Simply Wall Street actually consider AT&T to be about 13.5% undervalued. They calculate a fair value of right around $29.03, throw in a highly attractive 4.5% dividend yield and a very low beta of 0.23, meaning the stock has remarkably low volatility compared to the broader market, and honestly, you've got a pretty compelling case for value investors out there.
Section 6. Evaluating the bear case. Let's look at the heavy anchors holding AT&T back.
Because listen, no explainer is completely fair without unpacking what could actually go wrong, right? Those space-age satellite threats remain a looming existential risk for sure, but they aren't the only anchor dragging AT&T down. To stay competitive, AT&T is bleeding cash into heavy capital spending. I mean, that $23 billion EchoStar deal, that's piled on top of the $60 billion they've already spent since 2020. And this spending is happening while their legacy copper wireline business is effectively dying out, dropping a steep 26% in Q2 alone. Add in some major institutional selling from big players like TD Asset Management, and you can start to see why some investors are pretty spooked by the giant elephant in the room, their massive debt load, currently sitting at a 1.6 debt-to-equity ratio.
Finally, Section 7, Conclusion. Let's wrap up with some final thoughts on AT&T's transformation.
What we're witnessing here is a truly massive corporate transformation. They are trying to balance this top-tier fiber convergence strategy against incredibly heavy legacy baggage, all while fighting off space-age disruptors. And yet leadership remains remarkably confident. CEO John Stankey recently stated, "We believe our network performance and operating scale can't be matched." And you know what? They're putting their money where their mouth is. They've committed to returning $45 billion to shareholders by 2028, and they're accelerating their share repurchase plan to roughly $10 billion this year alone. Which leaves us with this final, overarching thought to consider. You've seen the undeniably impressive cash flow. You've seen the $23 billion spectrum buys and the massive fiber expansion. But you've also seen the staggering debt and those looming satellite threats from the stars. So what do you think? Is AT&T destined to just be a fading legacy giant, or are they actually successfully building a future-proof connectivity powerhouse? I highly encourage you to weigh all this evidence for yourselves, continue doing your own research, and of course, always consult a qualified advisor before making any investment decisions. Thanks so much for joining me on this explainer, and keep learning.